Talk a little bit about the inputs that Watson is using to determine the best picks.
Yeah, so AIQ takes a comprehensive approach. So we leverage a lot of unstructured data. So we're analyzing millions of news articles, social media posts every single day, and we extract the sentiment and also the intent. Intent meaning, what does it mean? We then combine that information with macro data, fundamentals, and technical data to make a prediction on about 5,000 US publicly traded companies to understand which ones are going to have the best price appreciation. And then we select about 150 names that have the best opportunity for that price appreciation. And right now, you're right. It's leveraging. It looks like it's writing the AI and cloud theme at the moment. However, it does change over time. Katie wrote a great article back in January, it was really heavy consumer discretionary.
Yeah, so talk to us a little bit about that turnover, because when I was writing that article, it stuck out to me how much turnover this ETF has. And Eric Balchunas, he's not here, but he's looming large over this show. He made the point that if you look at AIEQ's turnover rate, it's something close to 1,700% over one calendar year. Where do those transaction costs show up? Is that something that you have to eat on your end, or is that something that the end client has to ultimately pay for?
Yes, I think there's two elements when you're concerned about turnover, right? One is the transaction costs, and the other is the taxes. And so the ETF vehicle, when we thought about how are we going to leverage an AI strategy, what would be the best vehicle for that? We ultimately went with an ETF because as it relates to taxes, AIEQ did pay taxes initially the first year, but since then we've been able to avoid any capital gains distributions. Now the turnover is completely data driven. So in earlier years, it might have been as low as 200 or 300%. You're right, last year was higher. 2022 was a market anomaly. And so the system was trying to identify trends during that time. And there was a lot that was going on last year, and not in a good way. So there was more turnover than has historically been. But the transaction costs, yes, there's a bid-ask spread when you're trading stocks, and also a price that you pay per share. Obviously, it's an ETF, so it gets institutional pricing. But transaction costs are built into the models. So when it makes a decision on whether or not to sell a stock and buy another, it takes in consideration the transaction costs as well.